On today's episode, we are going to take a look at two growth stocks that have done amazing returns to investors, and many of these still believe that we're still in the early innings for them and can still provide great returns in the future. Both of them have provided strong revenue growth in the past, but even after this whole COVID situation is done, I still believe they will continue to provide strong revenue growth as well. On today's episode, we're going to start off for each company, do a quick overview of what they do, their revenue breakdown. Then we're going to take a look at their financial numbers. And at the end of both these stocks, I'm going to end up giving my thoughts. Like always, my name's Jose Najarro. By day, I'm a senior electrical engineer, but by night, I'm a self-taught investor looking for investments to hold into my portfolio and have better returns than the overall market. I've been doing this for the past 5, 6, 7 years right now, so I definitely have some time under my belt. And if you guys want to see one of these cool shirts, the merch is down below. If you're new to the channel, make sure to hit the subscribe button and don't forget to hit the thumbs up. It helps the channel out so much and I truly appreciate it. Remember, none of this should be taken as advice as I am not a professional. And before we get started, go down to the comments. Let me know two stocks that you guys want me to take a look at for upcoming videos. While you're down there, you should see a link to my Discord channel. It's free to anybody that wants to join. I post all the time I want to buy. Every time I buy, sell, or do anything with the stock, and we have over 1,000 members there, so it's a great community and it's free for anybody that wants to join. You should also see a link to Webull. If you sign up using that Webull, we both could get a free stock. Sometimes they even do specials where we get 2 to 3 stocks. All right, so the first company we're going to take a look at is Upwork. This is ticker UPWK to all my podcast listeners. Right now it's sitting at $29.26. For the day, it was up about 1%, not much, but it is right now at its all-time highs of the years, around that level. Market cap is about $3.6 billion, so it's not that big of a company compared to some of the other companies we've seen in this channel. Year-to-date returns right now are 178% to investors, so congratulations to all those holding long. So first, let's try to understand what Upwork does, and the best place is just go to the website upwork.com. Upwork is the world's largest work marketplace that connects businesses with independent talent as measured by gross service volume. So pretty much if you want to hire a freelancer, you go to Upwork and you can get them to do stuff like web and mobile software development, design and creative, writing, sales and marketing, and they have different types of markets as well. All right, so first let's take a quick look at the revenue breakdown. So they collect revenue in 2 segments. The first is the marketplace, and this is if you're a freelancer and you get a job, Upwork takes a portion of your salary or your paycheck, and this is where a majority of their revenue comes from. This is $88 million, and then the other $8 million comes from managed services, and this is some type of services that they might provide to freelancers to help them out grow their channel, or not grow their channel, but grow their business within their website. Quarter 3, which ended in September 30th, is their most recent earnings. Revenue was up 24% compared to the same time last year. They also beat expectations by about $6.3 million. That's actually not a bad number when total revenue was $96 million. Their marketplace revenue grew 26% compared to the same time last year, and they also saw an increase of gross service volume up 23%. That means that either more people are using their services right now, or they're selling at heavier prices. Gross margins for this company is amazing. We can see from that total revenue of $96 million, $70 million were gross profits. So their cost of revenue is pretty low. Margins are around 73%. But we can see after operating expenses, the company unfortunately is not profitable. Loss of operations are about $3 million. So they're not losing too much money, but it's definitely something to keep an eye off. Net loss per shares were their earnings per share were about 2 cents loss per share. Upwork did give revenue outlook for this upcoming quarter. They estimate $96 to $98 million, where the overall consensus was $92 million, so that's a great beat there. Then for the full year, they expect $363 to $365 million, when the overall consensus was $353 million. So we can see they are still producing great returns in that revenue growth. Next, I want to take a quick look at some technical data, and here I use my favorite volume and related to stock price. So it shows me at what volume has this stock really been bought at, and this helps me determine a lot about support levels. So as a long-term investors, this doesn't help me much when initiating a position, but when adding into a position, I do tend to look at some of this to make sure things are not overextended. The first thing I can see is, yes, Upwork right now is a bit overextended. Again, for adding into a position that doesn't really affect me too much. The closest support level I see is this big gap at 25 points, around 25 and $26. Then after that, we see it at around $21. And the biggest support is somewhere around $16 right now. That's where we see this huge volume at. Like I mentioned, right, for opening a position, even though it is extended, I don't mind purchasing. But if I was adding, I might hold off for some time. Now let's take a look at some financial numbers. First, let's start off with the expected growth for Upwork. Upwork is expected to grow 16.1% on average annually for the next 3 to 5 years, which is strong returns. They're not expected to be profitable until the end of 2023, but they do have cash flow up from operations are positive, so they do have some positive cash flow coming from their everyday business, which is great news in my opinion. And just to put in perspective, the recent Q3, which was one we looked at, grew 24%, which is not, it's a lot higher than that 16.1% expected by analysts. I believe maybe analysts might be underestimating the growth that this company can see. Next, I want to take a look at historical growth. Let's take a look at historical revenue growth. In 2019, it grew about 18%. In 2018, it grew about 25%. And in 2017, it grew about 22%. So actually, it's not, it's a little bit stronger than what analysts expect the future to move, but it's not that far off. Then if we're taking a look at this company's gross margins, they are improving as the quarters progress. Profit margins are still like in the negative low single digits. And it doesn't look like, based on any trends, that they are expected to be profitable anytime soon. All right, next, let's take a look at the balance sheet for Upwork. So they have about $88 million of quick cash, and they have about $67 million of current investments. So roughly about $150 million of quick cash available to them. They only have about $26 million of non-current debt and $7 million of current debt, so about $35 million of debt. So they have about $150 million in cash compared to $35 million in debt. So they have plenty of cash to pay off total debt and still have cash left over. This is pretty good because this is a company that's not profitable, so we wanted to be very strict on their balance sheet. Next, I wanted to take a look at their cash flow statement, and we can see as revenue is increasing, operating cash flow margins are kind of in an uptrend. It does have its cyclical things, but one shouldn't expect constant uptrends. But the overall trend keeps showing that operating cash flow margins are getting better, and they are now profitable when they produce cash flow from their business. Very similar to free cash flow, it has its negatives from here and there, but it is still in an uptrend. So that's the first stock we're taking a look at. The second stock we're going to take a look at is in a similar market, and that's going to be Fiverr. But before we go to Fiverr, you should also see a link down there below for 7investing.com, where every month they recommend 7 stocks for $17 a month. And if you use my link or my promo code Jose, you get $10 off your first month. May I say, yes, this is an affiliate program, but I use their services and would recommend it to anyone. All right, so Fiverr, ticker FVRR, very similar business. We're going to take a look at that breakdown in a second, but this returns have been way crazier than Upwork. Where Upwork, we saw about 178% year to date. Fiverr has returned about 725% to investors, and many believe we're still in the early innings. Market cap is about $6.64 billion, so about $3 billion larger than Upwork right now. And right now it is at its new all-time highs of $189. It ended the day with about 8% up for the day. So this is pretty amazing. So Fiverr, we take a look at their websites. It is very similar. They are a freelance company where you come and you look for a product you want. Small business, big businesses, and even individuals can go and look for some form of freelancer. They are also innovating. Fiverr, for example, mentioned a lot of their new innovations, something Upwork didn't mention too much of. But Fiverr is launching like a new purchase experience where if you have a very big project and you're working with multiple freelancers, you're able to break these large projects by milestones, so it helps the buyer see where the products are going right now. They also just introduced a new branding. I think they kind of revamped their website, their logo, and just the overall brand to kind of get this company really shown to the world. One of the major difference between Fiverr and Upwork is more, I believe, more United States based freelancer, where Fiverr is more international and all around the world type freelance abilities. They also started doing promoted gigs, and this is the ability for, if you are a freelancer, you can start to advertise your business within Fiverr. And again, this helps you make more sales and just become in the front of the eyes for those that are looking for similar services as you. So Fiverr, one thing I'm not too happy is they don't really break down that revenue breakdown. So revenue breakdown for Fiverr this most recent month, quarter which ended September 30, was $52 million, gross profits of about $43 million. So one thing I'm seeing is Upwork actually makes more sales than Fiverr. And to me, I thought it was the other way around, especially because Fiverr is a way bigger company, right? We saw Fiverr had a market cap of almost 2 times the size of Upwork. So I would have expected their sales to be a lot more. Quarter 3 non-GAAP earnings per share for Fiverr were 12 cents, which beat by about 6 cents. GAAP earnings per share were negative 1 cent, which beat by 4 cents on their most recent earnings. Revenue was up 87% compared to the same time last year, and it beat expectations by about $3 million. For the fiscal year of 20, they give revenue guidance of 186 million to 187 million. Again, we can see this is not as big as Upwork, so it's pretty interesting that it's worth more than Upwork. But I believe since Upwork is more domestic and Fiverr is more international, the growth potential is a lot bigger. We can see that, right? The revenue this quarter grew 87.8% compared to the same time last year, where Upwork only grew about 26%. They are seeing active buyers increase 37% compared to the same time last year at the end of this quarter, and the amount that those buyers are spending has increased 20% compared to the same time last year. So not only are they seeing more buyers, they're also seeing them buying more expensive products. We can see very similar to Upwork's, most of their cost comes from marketing and sales. Both of them are pretty small companies right now, so they're trying to just expand and market to different customers and different eyes as much as possible, and that's where they get most of their losses from. The actual cost of revenue is pretty low, and they have very similar gross profits. Now I wanted to take a look at some technicals for Fiverr. Fiverr also seems to be a bit extended compared to my 20 EMA that I have here, and we can see normally it trends in it, and then it kind of gets extended and pulls back. So again, this is why these pullbacks might never happen, right? And that's why, and if they do happen, they might happen at a stock price much higher. That's why when entering a position, I don't use much technical, but when adding into a position, I prefer them to not be overextended. The real first support level I see is somewhere around 155. Then I see somewhere around 127. In the mid 120s, we're seeing strong support levels. And then my next would be about 91. So I do believe we can see huge volumes here in the 120s as well as here in the 150s and the 160s. Next, let's take a look at some financial numbers for Fiverr. So Fiverr is expected to grow its revenue 29.9% on average for the next 3 to 5 years. So this one is expected to grow a lot faster than Upwork's. I do believe this is probably why it might be worth more. I'm still trying to understand that. The other reason is Fiverr is expected to be profitable by mid 2021, before 2022, where I believe Upwork, and let's scroll up to Upwork, I don't think Upwork is expected to be profitable until 2023. So I believe this could be another reason why the valuation is a bit higher for Fiverr. They currently just hit positive cash flow from operations, as we can see here. Let's take a look at past revenue growth. For the full year of 2019, Fiverr grew around 40%, and on 2018 it grew about 44%. So very, very strong growth for Fiverr. Taking a look at gross margins for 2019, they had 79.2% gross margins, very high levels, very similar to Upwork as well. We can see profits right now do not seem to be improving too much, but analysts expect by the end of 2021 or early 2022 they will be profitable. If we take a look at their balance sheet, they have about $214 million of cash and short-term investments, and they pretty much have no debt at all. So this is very, very healthy balance sheet for, again, a company that's not profitable right now, and they're burning a bit of cash, so they need to have a strong balance sheet, and this is definitely the case. So now what I want to take a look at is pretty much take a look at both Upwork and Fiverr on their valuations. Let's start off with my thoughts. Both of them are doing great, right? I do believe both of them are in markets that we're seeing strong growth. Upwork has a lot lower valuation, and that to me was pretty insane compared to Fiverr, right? I do believe that Fiverr has that higher valuation just because it's hitting those international markets as well, where Upwork really pretty much hits mostly the domestic here in the United States. But we can see by forward price to sales ratio, Upwork is a lot cheaper than Fiverr. Fiverr has a forward price to sales ratio at the end of this year of about 36, where forward price to sales ratio for Upwork is about 9.79. But we saw Fiverr is growing at faster levels. They were growing at about 40%, where Upwork was growing in the 20% this most recent quarter. Both of them did have a strong balance sheet, and that's something I'm very happy. And both of them did have positive cash flow from operations. Again, another thing I am super ecstatic. To me, I honestly wouldn't mind having either of them into my portfolio. I do believe maybe Monday I might open up a position in one of them. And to me, Upwork is the one I am debating opening up based on that valuation, right? I don't see why Fiverr is worth that almost 3.5% times more than Upwork. Their valuation is already 2 times, right? We saw Upwork was at 3 point something valuation, where Fiverr was already at 6 point something valuation. Again, Fiverr is expected to be profitable soon, so I can see, and that growth of the international, I can see why investors are more likely to pay for Fiverr. And actually here, if we're taking a look at non-GAAP earnings per share, Fiverr is expected to be profitable in non-GAAP earnings per share this year, and is expected to grow as the years progress, where Upwork is still not expected to be profitable anytime soon for the next 2 years, not even in non-GAAP earnings per share. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. It helps the channel out so much. Take care, guys. Have a good night, and see you next time.